Hi, this is Sheldon here with today's currency advisory report. Well, the US dollar index is at 79.47, which is down by minus 0.17 percentage points. Now we have our WPI data, the wholesale price index data, which will be released later today. And as per a consensus, analysts expect the inflation number to come in at 7.3% versus 7.24% reported in November. However, if the figure comes in lower than that, then we will see the rupee strengthen significantly as compared to the dollar, as the hopes for a RBI cut in interest rates would magnify substantially. Now the dollar rupee pair is expected to trade flat ahead of the inflation numbers. Later in the day, the WPI inflation number will decide the pair's trend. The euro dollar rose to its highest levels since April after breaking above the 1.33 resistance level on the back of weaker US trade data and as EU officials discuss financial problems in Cyprus. Now the pair is currently trading at around 1.3340. Market mood was seen lacking direction after Chinese inflation accelerated more than forecast to a 7-month high, dampening hopes of a possible monetary stimulus from the country. Now, Eurozone November industrial production is due for release later today. Apart from that, there's no major data that's due from the Eurozone or the United States. Now the Eurozone has already, the euro in the Eurozone has already surged more than 250 pips since last Thursday's ECB meet. In fact, the euro dollar has continued to climb on central bank held rates and policy. And Draghi assured markets that there has been a distinct improvement in the Eurozone and that the bank has not been considering any rate reduction now or in the near future. Now the euro dollar has continued to rise as expected today and is presently trading at around 1.3392. Now, traders can go long in the pair at current levels. In rupee terms, traders can go long in the euro rupee pair at around 73 levels in the spot market. Looking at the pound, well, the pound dollar pair experienced an early session setback after the government report showed UK manufacturing production unexpectedly declined in November. The pound yesterday made gains against the dollar after the Bank of England kept its monetary policy unchanged. Interest rates were also kept at a record low of 0.5%. Now the Monetary Policy Committee or the MPC also voted to keep its quantitative easing program at £375 billion. Now the pound dollar pair is expected to trade in a range of 1.6175 to 1.6100. We expect a flat to sideways movement in the pound rupee pair. Looking at the yen, well, the yen continued its descent to record lows against the dollar, with the pair climbing to trade at around 89.09. The stimulus package will exacerbate Japan's deteriorating fiscal health, as government debt is already at 220% of the GDP. The newly elected Mr. Abe, however, is under significant pressure to lift the economy out of its fifth recession in 15 years. Last week, the new finance minister also warned markets that they could expect the yen to trade in a 85 to 90 range for the balance of the year. Now, we expect the yen to trade lower against the dollar till it breaches around 90 levels. In fact, the 90 level seems to be a very strong resistance. So if it breaches 90, then definitely it's going to go to 91, 92 immediately. In domestic terms, traders can short sell the yen against the Indian rupee at around 61.50 levels. Let's wrap up with the technicals. Well, the dollar has a very strong support at 54.80 and a resistance at around 55. For the euro, there is support at around 73.22 and a resistance at around 73.80. For the pound, there is a very strong support at around 88.42 and a resistance at around 89.02. And for the yen, there is a very strong support at around 61.32 and a resistance at around 61.93. Well, that's it for today. Thank you.